what's good, my people? We're here. Let us talk about on how to use the fair value gap to enter a buy model trade. So we already talked about the sell model, so let us talk about the buy model. And as you can see here, we're on the 15-minute time frame, and here is a nice marked fair value gap of which the price retraced here. The bodies respected the fair value gap here and the order block, which was a nice signal that the market is willing to go on a certain direction. My draw to liquidity was here. So let us dive in 1 minute and see how we could capitalize on that trade. So on 1 minute, these are already pre-marked fair value gaps since the market that I was looking at earlier today. So these are nice markups of the fair value gap that existed when the market was panning out, and as you can see, they are very nice and highlighted here. The first thing you should do is to know how to identify the fair value gap that exists in the market. This is a very nice skill, and it will make your work easier on how to identify the fair value gaps and how to enter and frame your trade correctly. And as you can see, it was a nice bullish move on the earlier session of the trade, and the draw to liquidity that I expected was on this black line here. So let's start diving on this trade. As you can see, the market retraced downwards, failed to check out this low. This fair value, this order block held the price, and it bounced back in. When I see it's a very nice indication that the market is willing to go up, but we always wait for a nice market structure shift for us to enter a trade. So here is a very nice market structure shift, and a nice market structure shift is usually accompanied by a nice fair value gap, of which we can use that fair value gap to enter a trade. So, and as you can see here, the market retraced to this fair value gap highlighted here. There's another fair value gap here, down here. It retraced to this fair value gap and ran upwards immediately, retraced again, then finally went and took out this high and eventually reached the profit. And here we could use this fair value gaps to get the trade. We'll just say that first, identify the fair value gaps that the markets form when trying to take a trade. Wait for the market to retrace to the fair value gaps. Then, if you are expecting the market is bullish, you should buy while this black candle is forming. Buy when the candle is going down, to make sure that you maximize on the profit, since these markets are very dynamic. And today we'll be looking at NASDAQ, because I want to show you guys that this skill usually happens on all currencies, either forex, either futures, and either on, if you're trading on binary or derive.com. It also applies on the derivatives on VIX 50, VIX 100, VIX 75. There are always fair value gaps there, and you can use these concepts to get in your trade and make money with them. And as you can see, the market retraced to this fair value gap, went up, retraced again, then went up more. And as the price goes up, it leaves small fair value gaps. This is a 1 minute time frame. It usually has a lot of fair value gaps, but unlike the 5 minutes, they're like very little fair value gaps. You can see one here. These ones that are already marked here, they belong to the 1 minute time frame, of which I tell you guys that they leave a lot of fair value gaps here. Let's small fair value gaps, but in the 5 minute there isn't fair value gaps. That's why I like trading on the 1 minute time frame. It gives me the perspective, and it makes me more refines my trade. And this is how you get to identify fair value gaps. The fair value gaps are always on every time frame. Let's see on the 1 hour. The 1 hour, as you can see here, there's a very nice fair value gap here, and this is the trade that we took here, but we lack any fair value gap here. But on here downwards, there is a very beautiful fair value gap, although it's a very small one, but it has already been used with these candles. They went through the fair value gaps but closed higher, which means that the price was willing to go up, taking this liquidity here. And with that, let us meet in the next video.